afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your afternoon right here. We got about 53 minutes left to go on the closing bell, and it looks like we're setting sail into 2026 already. Now, we got a little bit of trading, but right now, pretty tame markets. You got the VIX sitting just above 14. Metals are where the action is, but we got the S&Ps, NASDAQ, Dow, and Russell all in the red. S&Ps right now negative by 0.1%. Off 6 points at 69.48. You get the NASDAQ 100. You're negative by 0.1 as well. Pushing kind of the session lows right where we were this morning, 25,703. The Dow off by almost 0.2%. You got a little bit of selling on the opening bell, all the way down to 48,580. We're almost 100 points above there. Negative by 83 points on the session, 48,665. And the Russell, negative by 13, trading at 25.22. We jump over to yield, so we'll talk a little bit of Fed. The 10-year right now, let me make sure we're not chopping around. It's going to say 4.13. Yeah, 4.13, the yield on the 10-year. Okay, we get the Fed minutes out. And, yeah, there was a little bit of indecisiveness. They see some more rate cuts coming, pretty much what you expected as the charts show. But right now, we're talking about a 10-year, as I mentioned, 4.13. When you look at the 2-year, okay, that's where you do see a little bit. Well, there's some volatile volume right there. But the 2-year right now at 3.45. 3.45. Whew. So is that 55? Yeah, almost 70 basis points of steepening between the 2-year and the 10-year. Jump over the dollar right now. 98.24 as the dollar catches a little bit of a bid. And as I mentioned, the VIX right now sitting at 14.27. All right, let's talk a little bit of Fed minutes. So what's interesting I found here is, just to show you how differently you can construe this information, right? Watch just the headlines of Bloomberg, Wall Street Journal, and CNBC. And you shouldn't even put CNBC in the same ballpark as Bloomberg and the Journal for the news and the journalism that they do. But either way, so Bloomberg puts it as Fed minutes show most officials expect additional rate cuts. That's their headline. The Journal puts it as the Fed minutes suggest caution about further cuts early next year. This is the same information they just read. That's how close it is, okay? Read those two articles. I thought I had to double check my vision here. Do most officials expect cuts next year? Or do the minutes suggest caution about further cuts early next year is the kicker, okay? That is the difference in the headline. The Journal focuses on early next year, where there's some skepticism, but when you go out later in the year. The Fed minutes show officials were in a tight split over the December rate cut, so I love it, right? It's Bloomberg phrases it, and there it is. Fed minutes show officials expect additional rate cuts. And then the Journal puts it, I'll just even go back to the front page. Fed minutes suggest caution about further cuts early next year. And then the CNBC one says, we don't even know. The Fed minutes show officials were in a split. It's close, folks, okay? But to get into it, yeah, early next year, it may be tough. Some officials made clear they believe rates should remain on hold for some time, is as they put it. A few of those who supported lowering the policy rate at this meeting indicated that the decision was finally balanced, or that they could have supported keeping the target range unchanged. Right? Early next year, we'll see. 9-3 vote was the deal. Okay, of course, you had dissenters on both sides. Most participants noted that the move toward a more neutral policy stance would help forestall the possibility of a major deterioration in labor market conditions. At the same time, right? I just say, you know, it's there's a lot of unknowns here, okay? And I think it's going to be a trader's market coming into 2026 because this is going to be one of the things in play. AI is going to be in play, okay? Earnings, CapEx, but you better believe that the Fed's going to be in play when we get a new Fed chair. And as I mentioned, Powell gets 3 meetings, okay? And then the next Fed chair gets 5 throughout next year. Some participants who favored or could have supported keeping the target range unchanged suggested that the arrival of a considerable amount of labor market and inflation data over the coming intermeeting period would be helpful. Data dependent. Yeah, but as you can see, just even those headlines surmise, you know, you look in those minutes and there's some discrepancies and they're not quite sure. And realistically, we got to make sure that we get over this whole data deal, okay? Because the government shuts down for 2 months. The data is weird, for lack of a better term, right? We have inflation data that comes in at 2.6 to 2.7%. But one of the biggest stories about that inflation data is that they didn't even have the data for owner's equivalent rent, and they just carried forward a 0% inflation since they didn't have a number, right? They didn't have a most recent number. They just carried forward the last number. Well, you can always create a 0%. So the data is going to be important. Hopefully we get that data. Now, we take that opportunity to jump here. So crude, EIA inventories. Now, I used to always my dad and I did the program, the morning market kickoff, from 10 to 11 originally. Okay, what was awesome was when we did that program, for you long-term tigers and tigresses out there, we would always look at the EIA inventory that hit at 10:30. It always provided volatility, right? What's the inventory for crude? Is it higher than lower than expected? Well, this morning, no data. The EIA made a surprise announcement Monday morning that the data would be delayed. At first, the agency said no new timeline. Okay. Hours later, they said it's going to be published at 5 p.m. after the market settled. EIA lost more than 100 of its roughly 350-person workforce from Doge. So hopefully they make sure they have enough people in there to do their job. The first scheduled to Monday from the last week regular release to the Wednesday after the executive order that gave employees off. Many people who understood and supported the systems used to create the weekly report, which combines multiple surveys, departed during those reductions. Because the report combines several surveys, it depends on several systems. Without decisive acceleration, we're going to have much bigger problems than delayed data tables. For all the talented and hardworking EIA staff, okay, rebuilding mission-critical products hard-coded in near-dead languages, full steam ahead. So, yeah. But that's going to matter when it comes to the Fed. And hopefully that doesn't play out there as well. Because already, when you look at those CPI numbers, that government shutdown, it's contributing to a lack of integrity of data. And the Fed's going to need that. All right. Stay tuned, folks. We're coming back. We're going to talk to Basil Chapman. Always a good conversation. We're coming back with Basil, folks. Stay tuned.